All right, so we're going to go over the game plan for the week ahead. I always like to start by looking back at the last week or so of trading because that usually kind of helps set the stage for what I can reasonably expect for the upcoming week. So we ended April with relatively small green days. If we look at the calendar here, this is the last 30 days for me, and it includes May 1st, 2nd, and 3rd. But the last week was pretty small in terms of profit. I didn't even cross over $2,000 on these days. I mean, I had a couple red days, but it was just slow. Like we just didn't have a lot that was hot. And in fact, if I look at the last 30 days, I have only had 3 days or so, 4 days where I was up more than 5,000, which is my daily goal. So most days I've been coming up short on my daily goal. Now, if we look back on the last 60 days, or we look back on the last 90 days, you'll see that we had a really nice stretch here in February where I was hitting not just $10,000, which is double the daily goal, but $15,000, $20,000 days. So, when the market's hot like that, I want to dig deep. I want to be aggressive. Unfortunately, I gave back a little too much of it on those 2 red days. And now we've just sort of the luck of the draw been in a little bit of a slump. This is one of the things that can be super frustrating about trading. The market will be hot, you'll be trading really aggressively, and then you take a big loss, and that sort of marks the end of your hot streak. But often the reason you have that big loss is because maybe you didn't quite realize it, but in the last sort of few days, the market had started to cool off already. If we look at this, I had a couple of smaller green days here, and a decent red day, but then another small green day. Things were kind of starting to cool off a little bit, and then boom, big red day. So you kind of have to, have your guard up, because one of the worst things you can do is end a hot streak with a big loss. It's like, I don't know, it really kills your confidence. It's like, crashing on your last run of the day skiing, or, totally having a terrible game on the last game of the season or something like that. It's not a great way to finish. And now there's nothing you can really do, because all of a sudden these huge rejections, which you lost on, sort of mark the shift in momentum from it being really hot to being quite a bit cooler. And when we get that shift, then it's going to take a lot more time to recoup those losses. And that's exactly what happened. So we went into this sort of extended period where it's been a little bit slower. Not that different, I suppose, from December or January. But it's been a little slower. So, nonetheless, April was a good month for me. Let's see. If I put my, website up here, down in the footer, I've got my 2024 statements here. So February, March, April is posted for those that are curious. You can see the gross profit, which is gross profit before fees and commissions. You'll see the total commissions, the total regulatory fees, the total ECN fees. These are the routing fees that I pay, which was $6,200 for the month of April. Gave me a net profit of $36,000. Gross profit was closer to 43 or 44,000. So paid a chunk in fees and commissions as I typically do, but nonetheless finished April in pretty good shape. So the only thing was that coming into the new month of May, I was sort of feeling like, is it going to be another cold month? And my thought was that what I have to focus on first is just getting a little bit of a cushion on the month. So on May 1st, beginning of the new month, I'm sitting down and I'm thinking, is today the day I'm going to swing for the fences and be aggressive? No. I'm going to take it slow. I'm going to try to hit a couple of base hits. I'm going to get in the green, and I'm not going to overstay my welcome. So let's look at the calendar here for May 1st. So May 1st, boom. Basically, right away, had a nice trade. This was a breaking news trade that I got on PALI. So news came out 8:30, bottom of the hour, and immediately started trading, as it was squeezing up. And I took a bunch of trades on it. I did follow my rule about max share size. This, by the way, is showing volume as round trip. So it's like 3,500 shares first entry. Anyways, so I kept my max share size at 5,000 shares, and I did a good job there. So May 1st, $500. May 2nd, May 2nd was a little frustrating because you'll see here that I got myself up 2,000 and then gave back half in one trade. Started to make back a little and then gave it back. And at that point, I was like, you know what? Let's not push it. Enough's enough. So didn't push it, threw in the towel there. That was May 2nd. And then yesterday, we ended up having some really nice momentum on SBGX. And then we had another one that gave us a big move. So I got kind of like two really nice trades. Got myself up over 5,000. And with that, I was like, you know what? Let's take it off the table. It's the beginning of the month. And hey, it's a Friday. Like, let's be grateful for this. I think this is a terrific start. And so now I'm sitting up, what is it? 5, 6, 7, 8,000 on the month. That's not bad. The first week of April, I was up about 14, 15,000. But this was only a 3-day week. So anyways, not bad for a 3-day week. The equity curve seems like it's kind of starting maybe to pull away a little bit. If I could have 2 more $5,000 days next week, or something like that, then we're starting to really move in the right direction, get a cushion on the month. Now, I have a little bit of regret from yesterday, you could say, because although I traded SGBX and did well on it, I sort of threw in the towel a little early. I thought that we were going to have a jackknife when it came back up to 6 right here. And I was really impressed when it didn't jackknife and it actually ripped through 6 up to 685 and almost halted. So I missed that trade, but then it sold off on 2, 4, 5, 6 candles. So I was like, that's weird. And then it punches higher again. And anyways, I didn't end up making as much on it as I think I could have. And then I was a little frustrated about that. And I was like, all right, if I'm feeling frustrated, best thing to do is walk away. And then BENF goes from $2 to $12 a share. And I feel like this is the type of stock that in a hot market I could have crushed. But the market has been a little colder, so I really didn't expect this. And it was a little later in the morning. And anyways, so felt a little annoyed that I missed out on that. I was very pleased to see some of our members in the chat room talking about how well they had done on this move. But unfortunately, I missed it. So, now I'm thinking about, all right, well, we've got, we finished the week with sort of a wild card Friday. We had some great momentum, a couple of really big moves. Now, BENF had no news catalyst. It ended up coming back down a good bit, but still holding up 250%. So it could be worth watching on Monday, depending on how it looks pre-market. So at 4 a.m., if it tanks to 4, then, it's done. But if it spikes to 8 and kind of is holding up, then we could get a curl and maybe we will look for a retest, double top here for resistance, and then probably reject off that level. So it is possible, but again, it didn't have a catalyst on Friday, so it would just be a continuation setup, and a continuation setup when you didn't have a catalyst in the first place is not as likely. But this may be a trigger for some sympathy momentum coming into next week, as other traders who traded SGBX and BENF are going to jump on the next thing that starts to pull away and move. That's possible. I don't know if it'll happen, but it's possible. It's something to be aware of, that we can have these shifts in momentum and sentiment where you start to have something like that. And now when traders see something squeezing, they're going to be maybe a little more aggressive to buy it. And maybe shorts will be a little bit more cautious to get short too soon. And that can kind of create that shift in balance more to the buy side where we start seeing more exaggerated moves. So that is a possibility, something that I'm definitely going to keep an eye on. I mean, ultimately, that is what happened in February. So it's worth watching, but I don't, it's ultimately to be determined, but it's just something to be aware of. So even if we don't get any continuation on BENF, we still may see other opportunities in other areas of the market where this sort of momentum is spilling over. Now, when it comes to the overall market, the S&P 500, kind of a bit of a wild day on Friday. We sort of had this big spike here pre-market, this pop up, this drop back down, then it sort of rallies back up. We're continuing to have a market that's very sensitive to economic data right now, especially anything that could indicate interest rates are going to remain higher for a longer period of time. I mean, the Federal Reserve has already indicated that interest rates are going to be high for a while, but they had indicated as well that we would start to see some rate cuts this year. And so now there's a bit of question of, after this economic data that sent the market down, is that still going to happen? Has that changed? And what does that mean? So I think that we got a really nice rally from November up through April. This was a very strong period. Well, really up through March. And then April, the market was down about 4%. So it kind of ended that green streak right there. But it is still holding its levels, no doubt. And we're still at all-time highs. I mean, more or less on the S&P. So if I actually just go back here. So if we look, daily. So if we look at the peak back here, it was right around just 500 or 479, something like that. So I'll just draw it approximately there, 480. So, holding above that level at this point, we could come back down to the 200 moving average, and, we would just sort of be at that level, which would be just fine. So anyways, overall market, I think, yes, we have a little bit of a headwind right now. We've got some economic data that could create some more red days, but I'm not super concerned about that right now, because we had such a strong move that even if we come all the way down to the 200 moving average, we're still positioned pretty well. So, that's kind of the big picture. I don't look too closely at the Russell. This is the small cap ETF or index. It's got 2,000 small caps, the Russell 2000. Notably, this is below its peak. It didn't come back up, even though the market went all the way to the back to new highs. This is lagging behind, but that's typical. So that doesn't shock me. It takes some time for a bull market to really filter all the way down to some of the lowest quality stocks in the market, typically, which are small caps. But it hasn't meant that we haven't had opportunities as the year has been going along. So, in terms of where I sit on the year, in total, I'll just do a filter here. So we'll go to year to date. So right now, year to date, sitting at $242,000 in gross profit. However, my commissions have been a bit higher this year. They were higher last year. They've been higher this year. I've got $30,000 in ECN fees and $10,000 in commissions, which brings me back down to about, a little over $200,000 of profit. Having my fees and commissions be 10 to 15% is typical. Having it pushing higher towards 20% is not ideal. So I have to be a little careful about not over trading. If we look at last year, the same period of time, just as a comparison, so do 2023. So year over year comparison, I'm actually ahead of where I was last year, which is good to see. By 50,000, by 100,000. And that's really thanks to a really strong month in February. But the fees and commissions are basically the same. So my amount of trading has been sort of similar year over year, right? The amount of commissions I'm churning, but my average winners have been bigger. $400 winner, $400 loser, $1,900 daily average. Whereas, this year I got a nice boost from some good trading in February, 600, 600, 2,900. And again, this is all, it's all relative. Some years are going to be really hot. Some are going to be cold. 2022, I was at 400,000, right? So 1,200, but I did have a couple of big losses there, so, and fees and commissions there were even higher at 100,000 so far. So I was trading a lot more in 2022, just, to compare. And certainly I would say 2021 would be similar, but 2021 was when we had GameStop. So 2021 was 1.7 million, but we had GameStop and my commissions were 230,000. You go back to 2019 or 2020. We'll just keep going kind of year over year. So let's see. Oh my gosh. 2020. Oh, come on. There we go. All right. So 2020, I was at 240,000, basically same as I'm at right here. Although commissions were a little higher in 2020 at 50,000. So 2020 sort of matched. Then we're going to go 2019. 2019, I was at 230,000. So, overall, I would say I'm kind of on par right now with my averages. If you exclude obviously GameStop and a couple of those really good years. So 295 in 2018. 2017 was when I was doing my small account challenge. So this one's going to be lower. This one was 121. But I began on January 1st of 2017 with $583.15. And I know some of you are like, wait a second, what did you just say? So I'll just go here just to show you 2024 earnings. This is 2017, 18, 19. So this is what, 2, 4, 6, 8 years right now of broker statements on the website. And this is my audit that began in January of 2017. So in January of 2017, I funded my small account with $583.15 right there. They whenever they do these audits, they round out the pennies. But anyways, doesn't matter. $583. January, I was up 16,000. February, I was up 60. March, I was up 28. Red in April. Finished the year at $335,000 versus a 583 starting balance. That's what gave me that return in, year one. I finished year one with a 57,000% return. That's pretty good. I mean, to say that I beat most hedge funds that year would be, I think, fair. By year two, I was at 143,000% return. By year three, I was at 200,000. Year four, coming up on 1,000,000% return. Anyways, seems a little braggy, but it is all audited, which is what I really wanted you to see. So this was real money. And it's not that to say my results are typical. They're not. But I was definitely in the right place at the right time to capitalize on the COVID market and GameStop. And then 2022 was a little slower. 2023 was a little slower. And right now I'm hoping to get back over the 2023 number, right? So just to kind of move back in the right direction. And since I'm already at 200,000, I don't think that should be a problem. I think I'll probably come right back in line in this area, between 400 and 600,000. But if we do get into another stretch where the market's really hot, then it's possible the next thing you know, I'm going to have another, couple of really strong months. If we look sort of overall, $117,000 of profit, January 2018. That was a great month. I think that was my first 100K month. Some $50,000 months in here. And then all of a sudden COVID, May of 2020, 200,000, June, 1.2 million, July, 800,000. It was insane. And I was right in November, but then bounced back in December. 21, crazy. And then 22, things slowed down a little bit. So anyways, just kind of the story of my last, 2, 4, 6, 7 years of trading. And, my game plan really, as we look forward to the rest of May, is just to continue to focus on base hits. Lock up the base hit, get green, build my cushion. So starting each day, max position size, 5,000 shares. Once I'm up over $1,000, I'll start to lean in. And that's what I've done every day so far this week. This week was like perfect because I hit that first, Friday was perfect because I hit that first $1,000 and immediately was like taking off the cap. And next thing you know, I was up $5,000 in like 3 minutes. It was like such a strong move. So I'm going to keep doing that. I'm going to stay focused. And the biggest thing that I'm keeping in my mind right now is discipline. I am on 27 days right now of focusing, and not just focusing, but on maintaining my streak of disciplined trading, which means I'm following my rules and I'm not spiraling. I'm not having red day spirals where I get, emotional hijack. And that's got to be the focus right now. So the result for the month of April, by the way, I would say in a large part, the reason that April was as good as it was because of the fact that if we look at my red days, they were small. My red days were small. You compare that with March, and it's like, that's the difference. March could have been just the same as April if I didn't have these 2 huge red days where I lost 30 grand. That would have been a $50,000 month. Even if I could have stopped on both these days at my $5,000 max loss, it still would have been a $40,000 month. Discipline. That's what it's all about, right? So anyways, I hope you guys enjoy this, found this helpful, this game plan for the week ahead. I will be streaming bright and early on Monday morning, as always, and I hope you guys join us. I did put a link in the description for last week's a couple of the recaps. If you guys want to do a 2-week trial, we have a 2-week trial. It's $19. So that'll give you access to our platform. You'll be able to be in the chat room. You'll be able to use the scanners, use the charts. And I actually, just for what it's worth, that $19 that you pay doesn't fully cover the cost of your market data. So I come out of pocket a little bit. And now we don't let people do back-to-back multiple, like, abusing the trial, because it's not fair. It's if you really want to be a member, just sign up and be a member. So we do have systems in place that we block people who are abusing the trial. But look, if you really want to give it a try and you haven't tried it already, or maybe you tried it a while ago, give it a try. We'd love to have you join us. 2 weeks, $19. You'll have access to the scanners, to the charts, to my broadcast, to chat rooms, and to the newsroom and the broadcast there. And you'll also be able to watch a selection of classes that are from the Warrior Pro curriculum. We call it the Pro Preview because it's giving you a preview of what it's like to be a Warrior Pro member. So anyways, check it out if you'd like. And I hope you guys tune in to some of the other episodes I've got here on YouTube, because I've got a lot of content that I've been uploading recently, and I've got a bunch of new videos that are going to be coming this week. So stay tuned for that. I hope you're subscribed to the channel. I hope you hit the thumbs up. And I'll remind you, as always, that trading is risky. My results aren't typical, and there's no guarantee you'll find success. Whether you learn from me or you learn on your own. So manage your risk, take it slow, and I'll see you back here on Monday morning.